Thank you for tuning in to another edition of the Vulcan Report. This report is for trading on Monday, July the 18th, 2016, and it is also an end of day report for the closing day of Friday of last week. As you can see, the Dow Jones futures contract hit a new high of 18,493, and it did that late Sunday, and you can see now it's just hovering up there now. Market is in the technical overbought area, but it is trying to lock in as it continues to march toward 19,000. I do believe that that is exactly where the market wants to be headed, is 19,000. So that's about another, we'll say 500 points from where we are now. Very powerful upward thrust, even though technically looking on the chart, you don't really see it. And that's because this is nothing but the work of the Fed to keep the market propped up amongst all the propaganda and weird stuff happening in the world. It should also be noted that not all of the markets are following suit like this. And as we move on in the video, you will see that. Now, going forward, the Dow is very well supported down to the 17,000 level. So 17,000 wants to be the new floor here. So don't know if that will be tested anytime soon, but for right now, the market is uber bullish. Here's the situation. If you look at the Nikkei, you see quite a different picture. This market is in a negative pulse wave situation, but it's not hitting new lows. It's actually range bound right now. But the downtrend is still intact, and the market's still way under the Kumo cloud. Technically speaking, the Nikkei needs to get back above 18,000 in order for us to say, hey, stocks are the place to be right now. It's still up in the air right now if this market can even continue. Just to break out, it has to continue to have a massive rally this week. This market needs to close above 17, let's say 17,400 even. Let's round it up. Say 17,400 even. If it can close above 17,400 even, then goodness, that's saying a lot. All right, that's saying a lot. That's still a lot of movement. Just to break initial resistance, it needs to get above 17,300. Okay, hence you see this right here, 17,300. Who's to say? I still see a shortcoming. This is overbought. This is not locked in. Nowhere near locked in. It's overbought. So a pullback could be coming this week. Will this market lead the other stock indexes to the downside? That is the question. If you just look at it, you can see that it is overbought. So we'll have to wait and see what the algos have to say about this going forward. See if we get any crash alerts, rally alerts, and so forth. All right, take a look here. This is the Nasdaq. The Nasdaq is quite a different picture than the Dow. It's well supported under the Kumo cloud, and that's going to come in at the let's round it off, say the 4170 level. Okay, that's way down here. Okay, tough to say right now, but this one doesn't seem to be moving like the Dow is moving. This is a scattered type of a situation. This is more so, I think, a glorified range, not really necessarily an upward trend, because everything looks kind of broken off up in here. There's a lot of weirdness. I know the Brexit and all that, but you gotta admit this is a strange type of a pattern. Yes, the trend lines are smooth. Yes, they show an upward trajectory fashion, but they're not separating the way they should. This is a flat sideways pattern. If you take a look at it, you shouldn't see sideways like this, them stretching out, elongated like this. They should be moving in an upward pattern if this was a trend. This is not a trend. This is a sideways stretched rubber band. And it's in an overbought situation. Trying to lock in, wants to lock in, but it's weakening here. That's not normal. It's not elongated upward like the Dow was. This is very curious. I would not be surprised if I saw a crash alert today in the algos. You hear me keep saying that because I haven't run the algos yet. I'll be running them after I finish this video, and then I'll be updating the website. But for now, I'm questioning this. I would not be surprised. This is interesting. So we'll have to see how this plays out, but not looking like the Dow chart. The NASDAQ is not looking like the Dow chart. All right, looking at the S&P 500. See, the S&P 500 is more like the Dow. Okay, see how this is separating and pointing up. All right, so this is bullish. This is trying to lock in. This is trying to giddy up and go. It wants to go to 2200, and I think it will go to 2200. Different pattern altogether up in here, almost like the Brexit means nothing. You see what I'm saying? How this is totally different, totally upward trajectory all the way. The NASDAQ is flat. That is a big, big, big red flag. I'm gonna show you the Russell, and then you'll see what I'm talking about. Take a look at this Russell. See what I mean? The Russell we're just getting across now. Okay, the magenta looking purple line is your short term, if you will, and then the orange line is your long term one. So you see the short term crossing above the long term. Okay, so it's just now crossing. All right, but like the NASDAQ, it's still kind of flat, but like the Dow, it's trying to give an upward trajectory, but not yet. Look, we're still leveled out here. We're not pointing up like you saw the Dow and the S&P. It's a mixture between the two. It's trying to do something. It's a mixture between the Dow and the NASDAQ chart. All right, overbought, trying to lock in a trend, hasn't done so yet though. Got to take out last week's highs and see how where we close. Then if we, like, in other words, if we have another bar like this week, then I can say this is definitely locking in, and it's gonna be bullish and gallop up to much higher levels. You're getting up to the 1250s and whatnot. So we'll have to look and see. But right now, this one's a mixture between the Dow and the NASDAQ. All right. That's why I say the stock market is questionable right now. And like I said, I would not be surprised to see crash alerts this week. I don't know what the algos are saying yet because I haven't run it yet. I will run it after the video. So as you can see what I mean, this is what I'm saying. All right. Normally, in most cases, the equity market is priced a lot better than the futures contracts. And I've done videos in the past going into depth explaining that. So let me pull it up now, and then I'll show you what that looks like. All right, as you can see here, this is the S&P 500 ETF, the SPY SPY. See, upward sloping, separating here, just like the futures. All right. Taking a look now at the CRUDE. And here you can see this like the futures contract, okay? Just like the futures contract. And except for the support being below the Kumo cloud, it's inside of it, which is still a major sign of consolidation and weakness. I just wanted you to see that up front. And here's the ticker that follows the Nikkei, as you can see, the EWJ. Same situation. All right, same situation. So for this one, you can see it breaking above the long-term trend line, even though we don't have a crossing of trend lines yet. And last time we got up here, it did get shorted hard, as you can see. Came down, all right? You ran up to the 1225 and crashed down to 1138, almost a full dollar move. And that's a huge move for something that's trading under, around 12 bucks, all right? That's huge, all right? It's almost a 10% move. So here you go. All right, so this is what I'm saying, and you see the overboughtness. That's what I mean by, the equities usually are much better pricing. Normally able to not have as much noise within your data in the equities. It's just normally how it is. Like you may see a whipsaw situation in the futures that you won't see in the equities. So a particular support may be broken on the futures intraday, but that same support won't get broken in the equities. It's just a weird dynamic. It's always been that way. I don't see that changing anytime soon. So sometimes you get better pricing and better overall trend or movement if you trade the equities over the futures. If all things are being equal, though, you'd rather trade the futures because it's more leverage and bang for your buck. But in periods of consolidation and uncertainty, you're safer in the equities, and you can manage your risk a lot better, because with the futures it's a set number of shares. Like the E-mini S&P 500, it's set to 5,000 shares minimum, per contract. And if you want to lessen that, you would have no way of doing it. The only way to do it would be to go in and trade the SPY outright, and do 100 shares, 200 shares, 300 shares, and that's how you would be able to limit that. But anyway, moving forward, let's take a look now at the currencies. All right, looking at the U.S. dollar, you can see the U.S. dollar futures contract is bumping its head at the bottom of the Kumo cloud, just like it should, and we should see this continue to move sideways inside the cloud. This market is well supported at the 94 handle, very well supported, and it is in a positive pulse wave scenario, but our trend lines are flat, all right, and momentum's coming off from the overbought. Tough to say. I want to say it looks like it wants to try to break out to the upward part of the Kumo cloud, but it's probably going to meet with massive resistance at this 98 level. The dollar does have massive resistance between 98 and 100, or I should say 98 and par. We have a lot of resistance. So this one's going to be interesting to watch going forward. All right, taking a look now at the Brexit. Might as well call it the Brexit. The pound sterling. As you can see, it's coming off of the lows, that 128 low, after losing massively up in here, and getting about around this resistance. It's having trouble up here at the 135 level, as you can see. It's probably going to get it pounded, no pun intended. Oversold up in here, upward trajectory, kind of leveling off a little bit because you're getting toward this first level of resistance. Next resistance is at the 139 and then the 147. So got a lot of room here to try to make up and still be bearish. It can come all the way up here and still be bearish. And you're below the Kumo cloud. You have strong resistance at 147. So my guess is going to be more downside in this one. I see these rallies being heavily shorted, and then that's going to give the dollar the upward thrust that it needs to continue its upside momentum. All right, looking at crude oil. Crude oil is flattening out here up around between the $45 and $50 level, just as expected. Trend lines are flat. You don't see any no crossing, no majorness. So technically speaking, the big picture is still bearish, still in a bear market. It's trying to change that, but it is absolutely flatlined here. Look at this, flatlined. And anyone's guess is good where this is going to go. Massive resistance at the 51 level. And technically speaking, this picture right here is in a negative pulse wave. So we expect to see downward pressure. All right. So I think this week we'll see anywhere from flat to slightly lower prices in this negative pulse wave scenario. All right, we can see the picture a little bit better going over to the equity side for the crude oil, ticker OIH, and that one really follows the futures really closely. As you can see here, sideways, trying to come up a little bit. Momentum is still flat. And this one has major resistance at the $31 handle. It's in a negative pulse wave scenario right now. And it's just literally quiet, standing still, nothing happening. All this right here, this upward trend has stopped. All right. And we're entering the third week of this. Is the market just taking a break, and is it going to explode higher? It could possibly do that. So you want to keep your powder dry and be on the lookout for this 31 level. If it breaks like 31.20, that's a sign that this thing is going to get up and go and gallop and get to 35 and possibly 40. So we'll have to wait and see. All right, looking at the UCO, totally flat. I don't even like trading this one. A lot of people like it. I like the OIH way better than the UCO. That's just my opinion. The UCO though is a lot cheaper, so you can get more shares. But as you can see, it's flat and there's absolutely nothing going on here. When it was positive pulse waving with the crude oil, it really didn't do much. You figure it broke out from $8.99, right? And then you finally got all the way up to about $14.16. So you had some good movement, but you would have expected a lot more than that. I would have at least expected it to get up to 20, but it didn't. So this one, for the you lovers of the UCO, you want to see this thing break $14. Basically, if it breaks $14, then you're in the game. All right, switching our attention now to the gold. If you look at the gold futures here, you can see where the market topped out, back up in here, and it's been pulling back. Still got a little bit more downside to go before we say we've hit oversold, but the uptrend is still very bullish, and these pullbacks will be used as opportunities to bid this back up above the 1350 level here. Market is well supported at 1247 and a half, and trend line is now starting to move further away from the Kumo cloud. And like I said, this is just the beginning of this massive upward movement, and I do see within the next 12 to 18 months a retest of the highs. All things being equal here, this is a really nice upward trajectory for which to build a layer of support. First layer of support obviously being back down here. Second layer of support is at the 1200, and then the third layer of support is going to be at the 1300 level. So you will have massive support between 12 and 1300 going forward, and you need a nice strong elongated base, because the next test of the 1900 highs is what's going to be able to push this to 2200 in the short term. So this is going to be definitely one to watch going forward. All right, looking at the GLD, as you can see, same thing here, pulling back, and the market is very well supported at the 118 price level. And just like the futures counterpart, you can see this one is having building support around the 125 level, and then again around the 115 level. So this one remains well supported as well. So between 15 and 18 is really strong there, and then between 18 and 25. So 125 is going to be the new long-term support going forward as this market marches up toward the 150 level. So this also is going to be a good one to watch. All right, and here's the silver futures. This one is well supported at 16.88. That's around $17 price handle. And this one is pulling back, and I see the pullback here used as a trajectory to push it toward that $22 target that I talked about over the last couple of weeks. As the momentum's coming off, it may not even hit over, so it may just shoot right back up again. But this is really a powerful looking market here going forward. All right, looking at the SLV, same thing. So for this one, really hasn't pulled back. SLV has not pulled back. It's still locked in this this upward trajectory. So this one is looking very, very strong. If this market, all things being equal, if it can continue the way it's continuing, then this one should be able to hit $20 and hopefully close there by the end of the week. That would be really powerful sign for silver. But like its counterpart, though, looking at the silver futures, that could hinder the upward trajectory. But this market is very well supported at 1576. Very strong looking market. All right, and we'll end the video with Bitcoin. As you can see, Bitcoin is trying to march back toward that 700 level. It's still very much consolidated up here. Not a lot going on, just like in the prior video I showed you. And this market is very well supported at the 542 price level. So going forward, not a lot of action here, but this upward trend is very powerful. Those of you who missed this, I know you're kicking yourself, but you'll get another chance. I see one of these scenarios playing out here shortly. So just sit back on this one and wait and see if it can get back above 700. If it gets back above 700, you can take a nibble, take a little nibble at it and see what happens. But again, you're looking at a wide stop. You're looking at least a stop at 600. So if it breaks 700, you gotta be willing to risk $100 on this one, because it's just, look how wide the range is. Look at the volatility in the Bitcoin. So anyway, that's all I got time for now. Remember, bulls make money, bears make money, but pigs get slaughtered. Remember to take what you can, give nothing back. And if you're not able to make money on a consistent basis in these markets, you need to fire yourself and hire me. If this market can even continue, just to break out, it has to continue to have a massive rally this week. This market needs to close above 17, let's say 17,400 even. Let's round it up. Say 17,400 even. If it can close above 17,400 even, then goodness, that's saying a lot. All right, that's saying a lot. That's still a lot of movement. Just to break initial resistance, it needs to get above 17,300. Okay, hence you see this right here, 17,300. Amongst all the propaganda and weird stuff happening in the world, it should also be noted that not all of the markets are following suit like this. And as we move on in the video, you will see that. Now, going forward, the Dow is very well supported down to the 17,000 level. So 17,000 wants to be the new floor here. So don't know if that will be tested anytime soon, but for right now, the market is uber bullish. Here's the situation. If you look at the Nikkei, you see quite a different picture. This market is in a negative pulse wave situation, but it's not hitting new lows. It's actually range bound right now, but the downtrend is still intact, and the market's still way under the Kumo cloud. Technically speaking, the Nikkei needs to get back above 18,000 in order for us to say, hey, stocks are the place to be right now. It's still up in the air right now, overbought area, but it is trying to lock in as it continues to march toward 19,000. I do believe that that is exactly where the market wants to be headed, is 19,000. So that's about another, we'll say 500 points from where we are now. Very powerful upward thrust, even though technically looking on the chart, you don't really see it. And that's because this is nothing but the work of the Fed to keep the market propped up. Thank you for tuning in to another edition of the Vulcan Report. This report is for trading on Monday, July the 18th, 2016, and it is also an end of day report for the closing day of Friday of last week. As you can see, the Dow Jones futures contract hit a new high of 18,493, and it did that late Sunday, and you can see now it's just hovering up there now. Market is in the technical